Good morning, it's Monday the 9th of May and welcome to Atlantic Capital Markets' regular Monday morning roundup of the economic highlights coming up over this week. As always, we'll start with a quick summary of the key macro data points coming up this week in the world's markets, and we'll then take a look in more detail at some of the bigger stories straight afterwards. So let's get on with it. So let's take a look at the economic numbers being issued this week. And today, the Bank of Japan released the minutes from their last meeting. On Tuesday, we get an update from Germany on the latest ZEW economic sentiment, and that's something we'll discuss in more detail straight after this. Inflation is still a hot topic, so Wednesday's release of the latest data from both China and the US will make interesting reading, and we'll give our thoughts on the CPI situation over in the US afterwards. Thursday brings us an update on how the overall economy is performing here in the UK, and we'll take a look at that after this as well. Also, Thursday brings an update on PPI over in the US. And finally, on Friday, we'll hear the latest industrial production figures in the Eurozone and the US Michigan sentiment. And the companies that we'll hear updates from this week are as follows. On Monday, we'll hear from AMC Entertainment. Tuesday brings us a Q3 update from Peloton amidst a very challenging time for their share price, and we'll give our thoughts on this afterwards. We'll also hear on Tuesday from Coinbase. The independent TV company ITV report Q1 earnings on Wednesday, and entertainment giant Disney report their Q2 earnings, both of which we'll discuss in more detail shortly. Also on Wednesday, updates from Compass Group and Beyond Meat. On Thursday, we'll hear from Balfour Beatty and BT Group. And finally, on Friday, we'll hear from Sage. So last week's central bank action dominated and drove volatility, with the Reserve Bank of Australia, the Bank of England and the Fed giving the market plenty to think about. This week, US inflation data will be in focus, in addition to lockdowns in China and of course the Russian war, which means yet again supply chain issues will be the perpetual bête noire. Oil prices have also been rising again after the EU proposed a phased-in ban on Russian oil, and OPEC Plus didn't deviate from its previously agreed plan. So the painful question once again is, will higher oil prices also drive inflation fears yet higher? What a barrel of fun it all is. So let's take a look at all the top stories in more detail. Tuesday brings an update in Germany on the latest ZEW economic sentiment. Well, data from Germany has been steadily deteriorating amidst rising energy prices from the fallout from the Russian war, and as virus lockdowns in China also weigh on those supply chains. Last week, we saw that German factory orders plunged down 4.7% month on month, and German industrial production fell 3.9%, highlighting the impact on the German economy. Sentiment fell in April to minus 41 and is expected to fall yet further in May to minus 48. The data doesn't bode well for Europe's largest economy, which is in danger of tipping into recession. Peloton are due to release their Q3 earnings on Tuesday. Now, Peloton was a winner during the virus, but has been a bit of a nightmare ever since. The share price has tanked 90% from its all-time high reached in January last year, and trades around 50% lower so far this year. The reopening of gyms and the return to regular life post-virus, in addition to several management missteps and PR disasters, have resulted in the share price tumbling. Fiscal Q3 is expected to see revenues at below $1 billion and full-year revenue between $3.7 to $3.8 billion. That's down from estimates of $5.4 billion in Q1. Q3 EBITDA is expected at a loss of $125 to $140 million. However, with activist investor Blackwell's Capital piling pressure on the new CEO Barry McCarthy, the focus will be on the outlook and plans to cut prices and raise those subscription fees. Speculation surrounding a takeover still lingers, with the likes of Apple, Amazon and even Disney reportedly interested. Now, Wednesday brings a release of Q1 results from ITV. Well, ITV's share price plunged over 30% in March and has struggled to pick up from there despite reporting record revenue and profit forecast as investors were spooked by the launch of its ITVX streaming services at the end of this year to replace the ITV Hub. Now, rumours of a bid for Channel 4 combined with news of investment in yet another streaming service are raising questions about just actually where ITV is heading. Furthermore, the launch comes at a time when Netflix has taken a right battering as subscriber numbers dry up. Well, in 2021, ITV reported revenues of £3.45 billion, and this year is expected to see revenue rise to £3.56 billion, and Q1 advertising is expected to rise 16%. However, looking ahead, tough comparisons could be drawn into the mix after the delayed 2020 football tournament. Wednesday also brings an update on the Consumer Price Index over in the US. Well, the Federal Reserve raised interest rates by half of 1% last week, its second straight meeting of hikes, as US inflation rose to 8.5% in March. And that's its highest level in 40 years. Well, core CPI rose a less than expected 6.5% year on year, raising hopes that consumer prices could soon start easing. Yet, producer prices jumped to 1.2% in March, another record high, suggesting that consumer prices could continue to rise. Excuse me. Fears of surging inflation and the Fed, now acting more aggressively, dragged on market sentiment last week, pulling the Nasdaq down over 3.5% across the week. A hot inflation print could fuel bets of a more hawkish Fed and bring chances of a 75 basis point rate hike back onto the table. So as a result, do keep an eye on the US dollar and US indices. Disney is due to report second quarter results on Wednesday, some weeks after the horror show of Netflix. Now, Disney is more diversified than Netflix, but streaming numbers will be under the spotlight regardless. In Q4, Disney added 2.1 million subscribers, which jumped to 11.8 million in Q1, taking total subscribers to 129.8 million. Now, Disney is still sticking by guidance that it can increase subscribers to 230 million by 2024. But expectations are for earnings per share of $1.06 on lower revenues of $18.64 billion. Theme parks are still open and saw a strong rebound, helping boost those Q1 total revenues to over $21.8 billion. The share price currently trades down around 50% from its April 21 all-time high. And finally, on Thursday, we'll hear the latest GDP figures for the economy here in the UK. Well, the economy did see solid growth in January. However, this appeared to slow in February and could well slump further in March if recent retail sales and consumer confidence are useful leading indicators. Consumer morale slumped to the lowest level since October 2020 in March amid surging inflation and the fallout from the Russian conflict. Given how dependent the UK economy is on services and consumers, this bodes badly for UK GDP data. The UK economy is expected to grow 0.7% quarter on quarter in Q1 after the 1.3% growth recorded in the final 3 months of last year. However, on a monthly basis, a GDP of just 0.1% is forecast for March, and that's after growth of just 0.1% in February, raising concerns over the UK economy falling into recession in the coming months as that cost of living crisis deepens. So as a result, do keep an eye on the pound and of course the FTSE. So those were the big stories in detail. Let's wrap up with a look at the dividends due this week. In the FTSE 100, we'll hear from BP. And in the FTSE 250, we'll hear from Lancaster Group, Serco, Inchcape, Clarkson, Greggs, BMO Commercial Property Trust, Greencoat UK Wind, Fidelity Special Values, Peters Hill Partners and Renewables Infrastructure Group. So there you have it, a busy week in the markets as always, and as always, thanks for watching, but don't forget to click on that subscribe button to make sure you don't miss out on any of our regular videos. And also worth checking out our recent special video relating to the recently announced Porsche IPO, which was released last week with all our thoughts and analysis. Also, as always, a reminder that if you haven't done so already, do download our app, and why not give it a try to make sure that you receive all the latest up-to-date financial news and, of course, our award-winning trading signals. So until next time, from all of us here at Atlantic Capital Markets, have yourself a great week.